Hey everybody, how you doing today? This is episode 3 of 4 with Matt, the mortgage guy. How you doing, buddy?
I'm doing great.
Hey, one of the things I knew I wanted to ask you about, this might be a quick episode, you never know, but banks have loan limits. And the reason I bring this up is I get lots of people that follow me that are buying in Ohio and these other markets, and they're buying houses less than cars, right? 42K, 38K. And every time I talk to them, like, you better make sure you can get a loan, because my experience is, at least in California, again, my experience, I'm not a broker. Don't listen to me. It's anything under 100K is hard, because
Right.
it's not profitable. It's too much paperwork, too much liability, and the banks aren't interested. But you're the mortgage guy, so I thought I'd ask you.
Yeah, for sure. Because as a broker, I've got 60 different lenders and 60 different ways of doing business, and they kind of can set their own rules. I've got lenders that are set at 50,000 minimum. Some are set at 75,000 minimum. But I'll tell you that 125 is pretty standard for
Mm.
where you take a big pricing hit. And they basically,
Oh,
without saying it, and that's a lender's way of politely saying, no,
I don't
thanks.
I
We
don't
don't
want
want
that
your
loan.
business.
Yeah.
Right. And so, I'll price a loan for somebody. And I've done this before too. I look at somebody's loan and they have a $300,000 house. They're trying to refinance 104,000. And I tell them a rate and term refi at 104 is more expensive than a cash out to 125, because you're
Yeah.
paying, the hit for going sub 125 is even bigger than the hit for a cash out. So
Oh,
I've
wow.
done it where I say, let's get 20,000 cash out. Your rate's going to be a quarter lower, even though,
Let me
on the higher loan amounts, that doesn't
let
make
me
any
hand
sense.
you 20 grand and get you a better rate. Oh, all right.
Right.
That might
Right.
might be interesting.
And another piece to that, Mike, is there are regulations around what percentage of your loan you can have in fees.
Yep,
So if there's a flat fee that a lender's
exactly.
charging of 1,500, and they've got processing and underwriting and a half a point in cost for this rate because you're taking a higher rate, you can't do all that at a $55,000 loan. It basically won't pass
Yeah,
these
muster.
these these QM tests that have to be passed to get a loan. And so I've run into that before too, where even if the lender does go down to 50,000, at 65,000, it's not passing QM. And
Mm,
the lenders are operating a business, so they
yeah.
can't just say, we're going to charge
And
less of an admin fee or something on those
and they
smaller loans.
can't. Let's be really clear. This is not the lenders or the brokers making these rules. This, I believe it was Dodd-Frank, which
Right.
was created post crash because of some of the funny behavior that was going on in the mortgage industry at the time. They're like, no more. Rules are the same. Like we talked about in one of the original videos, the fees are the same, right? It's a flat fee.
Right.
And yeah, that's why people are sometimes surprised. I'm like, I'm not sure you can get a 30-year loan on that. What do you mean? It's a house. Of course I can. I'm like, I don't know. You might want to call a local bank, because
Right.
I don't think somebody in California is going to take that loan.
Yeah. And what I probably would suggest to somebody, if you're investing out of state, I bought a house in Alabama. I was referred to a guy in Arizona who's licensed in 45 states. And that's really all he did, was these small loans for investors. And he
Mm.
had 50 unit or 50 total units in investments himself. So he was an investor who worked with investors. After talking to him, I just thought to myself, I'm so glad I do not have his business model where he's
Oh,
doing
can you imagine? Oh,
600 loans to do less volume than I'm doing with
yeah.
250 loans in California. But
Oof.
that was his thing.
Yeah. So again, folks, if you're going to be buying out of state or even in California doing, for me, it's sub 100. Apparently that's sub 50 for some others. Just watch the fees. It is not, again, like I get so much weekly. Hey, I'm buying in Ohio. I got a house locked up for 40 grand. I can't find anybody to lend. I'm like, you might need credit cards or some private money somewhere, because
Yep.
I don't know. I personally don't have a mortgage lender that will do a 30-year loan on that. It doesn't pass QM, as you're saying. So,
Yep.
yeah. So just watch out for that, everybody. All right. Any other thoughts on that?
No, I think you nailed it. Yeah, it's people are going to have to probably research that before you get into contract would be a good idea.
Yeah. Amen to that. Well said. Thanks, buddy.
Yeah.